Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. Let's talk about the new science of successful swing trading. Now, like most traders when starting out, I suffered hugely from self-doubt, constantly asking myself, is this the right time or the right setup, placing the trade and then praying to be right, hoping it would work out this time. The elation of winning when it did, and the massive emotional crash of when it didn't. Jumping around from setup to setup, time frame swapping to make it look better than it seemed, almost forcing a trade setup or perspective. Adding, removing indicators and trend lines to create a spider web of mess and calling it analysis. All that really happens on a regular basis is generating a new high score on your blood pressure. So let's explore a better way and stay away from the make it up as you go along method and move towards the new science of successful swing trading. Hi, it's Phil. Welcome to the Anti-Investor Swing Trading Podcast, where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you don't make the same mistakes that I made. And from now on, I'll be your personal swing trading mentor to show you the way. So if you're ready, let's do this. Imagine the anxiety of constantly second guessing every choice that you make in trading. Did you place the right trade? Did you take it at the right time? Are you chasing the move? What if you just add another trend line or tinker with the indicator settings? And what were those holy grail settings you saw buried on the inside of an obscure trading forum? Can you find them? Are they worth it? Constantly asking yourself, where is the trade? Only to find that last week's stock that you talked yourself out of has just moved like a rocket ship to the moon. And it's painful. Many of those traders end up being bitter, having blown up another trading account because of making silly mistakes, trying to chase the successes that other people are having. Now, the bottom line is that those traders may have a lot of knowledge when it comes to the markets. The single thing that they don't have to make it work for them with any degree of regularity is a proven trading strategy. Knowledge of the tools and the tactics or some secret indicator settings do not make a trading strategy, and there's no hack for the stock market. And yet this is also true for any successful business venture. For a business that's set up to fail, selling fidget spinners on a Monday, NFTs on a Tuesday, taking Wednesday off, trying to flip yard sale junk on eBay because your cousin Bob found a few cool items on a Thursday. We all know that that's doomed to failure. You know it's true. But this is the same thing as jumping around from chart to chart or indicator to indicator or chasing tips. This is a recipe for trading disaster. And yet traders still do it. But for some bizarre reason, they know not to do it if we thought about trading as a business. And they rarely think as trading like a business. Now, what we do know, again, to stick with the metaphor, is for a regular business, you know that you need a trading plan, a product in demand, a marketing plan, and a dozen other considerations to run even a moderately successful business. And neither does that trading business need to be the best. Same as trading, you don't need to be the best trader in the world to make this work. Now, most of the time, all that's needed is simple competency to win in business, and this is also true with the business of trading. So that's what we need to do. Now, the good news is that we can plot and chart trading ideas by looking at the past data and testing out trading ideas without ever risking a cent. We can approach it exactly like a scientist does, which is precisely what I've done and show my traders how to do every week. And today there's very little excuse not to be able to validate a trading idea or concept prior to the trade. And you don't have to be a programmer, I'm certainly not. There's so many great non-coding software tools out there that you can, certainly compared to when I first started out, my first trading system, I hand tested everything. I would write everything down, I would manually scroll through the charts, one bar at a time, multiple times. I'd have to check, recheck, double check, maybe I spotted a mistake, or maybe I had a new idea, a new concept, a new money management variation, and I'd have to go back to the beginning. It would take weeks, if not months, to get enough data to be statistically viable. Then collect all that data and assess the data. Now, obviously, thankfully, these days, as I've just mentioned, there's great software tools out there that you can plug your ideas in with simple if this then that considerations. You don't need to be a programmer. At the click of a button, have everything validated. Was it a good strategy? Was it a good idea? Was it a new variation? Was it good money management variation, etc, etc, etc. We can have a report spat out with all the common and not so common metrics that allow us to make sensible assessments. For me personally, these days, I found a good program. Again, I'm not a programmer, but I found a program who can plug my trading ideas into my preferred software tool. I give all my students this algorithm so that they can see for themselves what I'm doing. It's not necessarily a black box what I'm doing. It allows me to test and validate my preferred methods and ideas into a scientifically tested system, which is backed by decades of data, as much data as you can shake a stick at, as well as nearly 28 years of in-the-trenches real-world trading on the hard right edge of the chart. I've got no doubts these days over what I should be doing, when I'm doing it, what stocks, what ETFs, what futures, anything. I can click of a button and validate my trading system on it, and I decide whether I should or shouldn't be trading it. If it looks good as per the positive expectancy strategy that we can validate, then I've got no reason to not take the trade or continually trade that particular chart. The data is quite literally telling me there's no reason for me not to place my trading setups on that stock or ETF or future or time frame, etc. More importantly, there's no more anxiety-fueled sleepless nights. I certainly had my fair share of them when I started out. Chasing foreign tips, getting sweaty palms, the emotional roller coaster, getting into swing trades late or out too early. None of that really happens anymore. It hasn't happened for a long, long time. Doesn't mean I won't make mistakes. I'm human. I'm not perfect. You know, there are going to be errors that are made, human error. But the reality is the system, the strategy works. Now, most importantly, all of my traders and we stopped asking one question. We're never asking ourselves, where is the trade? If you're asking yourself that question, you're doing it wrong. You're going down the make it up as you go along method. What we are able to do when we have data-backed strategy rules, we get to make clear, confident statements of there is the trade. Now, I've outlined my most profitable trading method in the very first podcast episode. And if you visit the link in the description, you can take a look at my YouTube channel for replays of my weekly Friday open house, where you can see the visuals of everything that I'm talking about. Appreciate that this is not the best medium for a very visual strategy overview. So you can go there, listen to the audio of the very first podcast, go to the YouTube channel, and you can see all the visuals that I'm talking about. Now, the strategy and the money management methods approach that I prefer, it allows me to, as I mentioned, at the click of a button, I can have this performance report spat out for me. It validates the strategy on the stock or the ETF or the index future and any time frame so that I can see if I should or should not place the trade. And most importantly, continually place the trades. I don't know if the next trade's going to work, so part of the process is consistency. I've got a strategy and a stock that's proven to work. Well, I'm going to continually trade that stock on a regular basis because that's what the data suggests, so that I can emulate the type of the type of performance that I'm talking about in these reports. At its most basic, I'm not just buying any or every dip, which is what most novice traders do. I am finding a dip in the context of a trend and then qualifying that it is indeed a dip worth buying. I'm very specific about the way that I describe things. These layers of detail allow me to make statements. All of these rules for that matter, these make up an algorithm, which is essentially just a fancy way of saying if this then that statements. So imagine how your trading would be improved if you stopped guessing and started making clear statements backed by decades of data, both historical and real-world trading results. And more importantly, these rules should mean that the process is repeatable and replicatable for everyone, regardless of your knowledge and experience. So if you've liked what you've heard today, be sure to go back to that very first podcast episode that I mentioned. Check out the YouTube channel. The link is in the description. That's all for today. Thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo, trader. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.